What's good, y'all? My name is Mark Russell. I'm a financial wellness board member with National Debt Relief. I have over a decade of experience working in the financial services world, and it's my goal to make very complex financial concepts that you hear every single day. I want to make them easy so you can transform your financial life. Why would I want to do that? Well, even though I was doing all right by myself as a financial advisor and licensed stockbroker some years ago, I found myself in a significant amount of debt. At my highest point, I was at around $80,000 in debt, so I know firsthand how stressful it can be being in debt, and I'm going to help you to get out of it. Right now, I'm proud to say that I'm 100% debt-free, and I'm on a mission to help others just like you take control of your financial life. What used to be a hobby is now my profession, and now you might have seen me in various features in Time Magazine, CNBC, or even Forbes Magazine. And I've even been nominated for multiple financial educational awards, and now I'm here to teach you how to be better with your money. Today, we're diving into a financial tool that many homeowners have at their disposal, but one that many people don't truly understand, and that's home equity loans. Now, if you own a home, you might be sitting on thousands of dollars in equity, but what does that actually mean for you? And more importantly, should you tap into that equity with a loan? When considering a home equity loan to consolidate or pay off debt, renovate a house, or cover a major expense, I'm going to break down exactly how these loans work, their pros and cons, and where they might be a good option for you. All right, first things first, what is home equity? And more importantly, what is a home equity loan? You're probably like, what the heck are you talking about, Mark? Let's talk about it. Let's break it down. First of all, equity is simply the portion of your home that you own outright. Think of it like this. If your home is worth $300,000 and you still owe $200,000 on your mortgage, you have $100,000 in home equity. A home equity loan lets you borrow against that equity, using your home as collateral. It's kind of like getting a second mortgage. You get a lump sum of money up front, and then you pay it back over time, typically with fixed monthly payments and a fixed interest rate. Sounds simple, right? But before you start planning how to spend that cash, let's talk about why people take out home equity loans and whether it might be a smart move for you. People use home equity loans for a lot of different reasons, but here are a few common ones. The first one might be home renovations and repairs. Are you looking to remodel your kitchen or fix that leaking roof? A home equity loan can provide the funds to improve your home's value. And in turn, this investment in your home may result in your home growing in value, which is why using a home equity loan for investments in your home is generally considered a pretty smart move. You may use it to cover big expenses like medical bills, tuition, or other unexpected costs that could be tough to manage. And some people turn to home equity loans when they don't have enough in savings. A home equity loan is often on good terms, making it an attractive alternative than using credit cards or taking out a personal loan. Some might use it to start a business. Some entrepreneurs use their home equity loan to fund a new business venture. It can help you get a head start on your business venture, but this comes with certain risk, of course. The next one is debt consolidation, and this is a big one. A home equity loan can actually be used to consolidate multiple high-interest debts into one single debt at favorable terms. Since home equity loans often have more favorable terms than personal loans or credit cards, home equity loans are particularly well suited to use for consolidating debts. This may even result in a lower monthly payment or less money paid in interest charges. If you have multiple debts, credit card, personal loans, medical bills, a home equity loan could be a great way to roll all that debt into one manageable payment. And here's why. Lower interest rates. Again, home equity loans typically have lower interest rates than credit cards, which means that you could save money on interest over time. Also, you have to consider that you're paying fixed payments. So unlike credit cards with variable interest rates, home equity loans give you a fixed monthly payment, making it easier to budget. But you have to be careful. Taking out a home equity loan and using it to pay off multiple smaller debts turns unsecured debt into secured debt. And you're probably like, Mark, what the heck does that mean? This means that if you can't make the payments, you're putting your home at risk. That's why home equity loans often have favorable terms, but it comes at a price, of course. That's also exactly why consolidating debt into a home equity loan only works if you have a solid repayment plan. And I'm not talking about a plan in your head. Actually write down what your plan is going to be to make sure it makes sense. Does that sound like something that could work for you? Check out this video where I go in depth about debt consolidation and take you through all the pros and and cons of this type of debt relief. So now you might be wondering, how does a home equity loan work? So let's say you decide a home equity loan is right for you and your financial goals. Typically, lenders are willing to lend you money against 90% of the value of your home. Let's say your home is worth $300,000 and the maximum amount of outstanding debt on your home as collateral would be $270,000. Now you have to subtract your mortgage from that amount, since that's already a loan that you have with your home as collateral. If you have $250,000 left on your mortgage, that leaves you with $20,000 in home equity that you could potentially take out a loan against. Here are some steps to take out a loan. You apply through a banker or lender. Just like a mortgage, you'll need good credit and proof of income to qualify. You receive a lump sum. Then once you're approved, the lender gives you the full amount of the loan up front, and then you repay it in monthly installments, where you'll be making fixed payments, which will include principal and interest over a set number of years, usually between 10 and 30 years. Pretty straightforward, right? Not so fast, my friends. Please, before you sign up for anything, let's talk about the pros and cons so you're making an informed decision. No one wants to get in financial trouble, right? Here are some of the pros of taking out a home equity loan. You can get lower interest rates compared to personal loans and credit cards. Home equity loans usually offer better rates. You get fixed payments. You know exactly how much you're going to be paying every single month. You know exactly how much you owe, and it makes it easier to budget. And there's some potential tax benefits. If you use a loan for home improvements, you might be able to deduct the interest on your taxes. Plus, using a loan for home improvements might increase your home value, leaving you with more equity in your home in the long run. Now let's talk about the cons. Your home is on the line. If you miss payments, you risk foreclosure. That's a huge deal, of course. So be careful when taking out a home equity loan. Also, you have to consider that you're taking out more debt. Taking on a fresh home equity loan means that you're adding another loan to your financial plate. If you're already struggling with debt, this might not be the right move for you. And you also have to consider closing costs and fees. Just like a mortgage, home equity loans come with fees, so it's not free money, because we all know there's no such thing as free money, right? All right, y'all, here's the bottom line. A home equity loan can be a great financial tool, but only when you use it wisely. It can be a powerful way to consolidate your debt, fund big projects, or even invest in your home. But it also comes with pretty serious risks, especially if you're struggling with debt and looking for a quick fix. If you're struggling with debt and looking for a solution, debt relief companies like National Debt Relief, who specialize in debt consolidation and relief programs, they could help you in your journey of becoming debt-free. Debt relief companies like National Debt Relief have in-house debt experts that are here to help you. If you have any questions or would like a free, no-obligation debt relief consultation call, visit their website at nationaldebtrelief.com. If you happen to have any other questions regarding any other financial related topics, check out the other videos in this series on National Debt Relief's YouTube channel. It's our goal to make very complex financial concepts that you hear every single day. We want to make them easy so you can transform your financial life. Thanks for watching. We'll see you on the next video.